Morning, Steve Freed in Chicago with the morning grain comments. Well, yesterday we had a surprising rally in the soybean market. It initially started when there was some short covering, people thinking that the delays in U.S. harvest was slowing farmer selling and adding to support in the marketplace. We also heard that some of the soybean crop might be lower, and that offers some support. And technically, we blew through some resistance levels. We saw a better than expected weekly soybean export number. We saw of that number, 5 million bushels was to China. And then we saw also that the crush numbers were also higher than expected for the month of September. All of this led to a 20-cent rally in soybean prices, and we blew through some key resistance. Corn followed, and wheat was a reluctant follower. Overnight, prices are a little bit lower for corn and beans. I think there is a little bit of profit taking, maybe some hedge selling. Over the 875 area, farmers should be thinking about selling some old crop beans, just like over the 925 area in new crop beans, farmers should sell some new crop beans. The numbers really haven't changed. Even if the crop is 100 million bushels smaller, we still have a carryout that's going to be close to 900 million bushels. And we still are off to a good start in South America. The 5 million bushels that China exported was part of sales of 10 boats that were done prior to the tariffs imposed on China and the retaliation by China. Those boats will be shipped. The Chinese government has said that they will allow them to come in to China, but there is no new additional China demand yet until there's some resolution to the trade issues. Now, we did see that the soybean harvest was only 38% done. The trade was expecting 40%, and average is 53%. Corn harvest was 39%. The trade was expecting 40%, and average is about 40%. So it's running behind. The next 10 days, though, should be cool and dry. So we should see a good harvest progress. We also noted that as far as exports to date, wheat's 287 versus 391 last year, corn 269 versus 154 last year, and beans 173 versus 266 million bushels last year. So the soybean and wheat export pace continues to run behind a year ago and the pace needed to reach the USDA's numbers, and corn is running ahead. And that's why in the last report, USDA increases the corn export demand. Funds bought 17,000 beans, 9 meal, 23 corn, and 3 wheat. They're short only 20 beans now. They're long actually 20 corn and short only 17 wheat. So the funds basically have gotten out of their short position, and now we have to see if they want to go long, given the strong demand versus the big supply and going into the end of the year. So again, I think the bean market's a little overdone. I think corn has a little bit more upside potential. I think long-term wheat also has a little bit more upside potential. As always, these are my thoughts and not those of ADM or ADM Investor Services, and have a safe and profitable trading day.